Good morning, everyone, and welcome to our webinar this morning. My name is Patrick Keegan. I'm Director of Wealth Management here in RBK, and I'm seen as being a pension expert in the company. So they tend to roll me out whenever there's anything to do with pension brought up. I'm being joined here today by two of my colleagues, Yvonne Clarke, who's head of our HR solutions, and Mary Byrne, who is a senior manager in our payroll department. The topic of today is to talk about the new auto-enrolment pension scheme being rolled out in the country. Also being called My Future Fund in a lot of advertising we're seeing at the moment. But just give everyone a very quick background on RBK. I know most of you know who we are, but some of you mightn't. We're the largest independently branded accountancy practice in the country. We're here to help service all your needs. Hence why we've got pensions here today, we've got HR, and we've got payroll. Our whole aim is to make sure we're looking after you, our clients. There's over 400 people on the webinar this morning. So we'll try and get through as many questions and answers as possible when we do it. The Q&A function is switched on, so please put your questions in there as we go along. I know a number of you have put in your questions beforehand. We have those questions in a couple of slides at the end, and we'll go through them the best we can. The auto-enrolment currently is a little bit up in the air because we don't have answers to everything. So chances are someone is going to ask a question where we will be able to turn around and say, we don't know, but we will come back to you when we do find out. And the reason why we won't know is because a lot of information still hasn't gone through. Okay, we're going to get started now. So thank you very much for joining us. Okay, so first of all, we've already talked about the team. So it's myself, it's Yvonne and Mary. Pension auto-enrolment, it's coming. A lot of people are saying, is it going to happen? Is it going to arrive? The government has started advertising. We've all seen the ads with the cherry on top. We're now going to have a just quick look and see, is it really a cherry on top? Is it the best option for you? What you should be thinking about, what you should be planning for. It is going to start on the 1st of January. They've done too much advertising. They've put too much money into it. They're not going to delay it. Okay, where has it come from? This has been going around since 2007 when Seamus Brennan, if any of you remember back that far, published a social welfare white paper on auto-enrolment. There's been a couple of false starts between now and then, but it's definitely going to arrive on the 1st of January. So why do we need auto-enrolment? Back in 2002, there was a fanfare. They launched PRSAs. They were going to make a huge difference to the pension scene in the country. They were voluntary. People had to opt in. People had to decide what they're doing. So what's left at the moment is there's over 800,000 people in the country without a private pension. Why is the government worried about this? We have an aging population. We are starting to see very low home ownership in younger people. The government is worried what's going to happen is as these people age, they're going to be still in rented accommodation. Does anyone know how much the state old age pension is? It's €253 a week. You're not going to be able to pay for rental accommodation in retirement at that sort of income. So they're trying to prevent that from happening. So they're trying to make sure people will take out a pension. So if you look at there is going to be a huge gap between the state pension and earnings. Bear in mind, we've got this graph, €50,000 is the average industrial wage in the country. It's a 71% drop in income when you come to state old age pension. So it's important to plan for it, and that's why the government is pushing this. So when we're talking about automatic enrolment, we have to look at what are termed eligible employees. Okay, so these are employees between the ages of 23 and 60 earning more than €20,000 combined. The reason why I'm saying combined, it is possible that some employees may work for you and may work for someone else. Once the joined income goes above €20,000, they will be enrolled unless they're already in a scheme making pension contributions through payroll. The important bit there is payroll, and it's not coming as a direct debit from their bank account. The other issue you need to bear in mind is that employees under the age of 23 or over the age of 60 may opt in if they want to. So don't assume because someone's under 23, they're not going to be in the auto-enrollment scheme. It's possible they can turn around and click a few buttons on a website and be enrolled. Same goes for people over the age of 60. There is an opt-out facility. A number of people have asked this in the questions. The opt-out facility only kicks in after the first 6 months. So if an employee after 6 months decides they want to opt out, they can opt out. If they opt out in months 7 or 8, they can get a refund of their contributions. The employer will not get a refund of contributions. Any point after month 8, they can only pause their contributions. So if they pause contributions, so will your contributions pause. Employees will also get an option to opt out after each contribution rate increase. We'll discuss that in the next slide. Employees will be able to pause or suspend them at any point after the first 6 months. But the important bit is, if someone opts out, they will automatically be re-enrolled after 2 years. Same thing happens if they pause or suspend contributions. So you need to bear that in mind. You need to consider that even if someone is opted out, they will be automatically enrolled. You will need to keep record of that when that will happen. So the contribution rates, we're focusing on the employer side of it. For the employer side of it, for years 1 to 3, it's 1.5% of income. The contribution is a combined amount of basic, overtime, BIK, any other form of income the employee gets. The employer has to put in 1.5%. The employee also has to put in 1.5%. You need to just consider the employee's 1.5% is going to be coming from net pay, not gross pay as a pension does. The salary ceiling is €80,000 per annum. That doesn't mean anyone earning over €80,000 isn't going to be enrolled. It means they're going to stop taking the 1.5% contribution at €80,000. The 1.5% in years 4 to 6 goes up to 3%. In years 7 to 9 goes up to 4.5%. And in year 10, it goes up to 6%. So after 10 years of the scheme being in place, it's going to be a total contribution of 14%. So now these years are not years that an employee joins, it's years from the scheme starting. So an employee joining in 11 years' time is going to be hit with employer contribution 6%, employee contribution 6%, and the government top up the cherry on the top of 2%. So we'll just have a quick look at how that compares to the current pension scheme. So on a traditional pension scheme, a 40% taxpayer, for €100 that an employee pays into the pension, there is €60 is net effect on the payslip. Or a 20% payer, for every €100 they put in, the net effect on the bottom line of the payslip is €80. With auto-enrolment, for every €100 that goes in, the net effect of the payslip is going to be 100%. So there is no tax relief. So that's the important thing you need to bear in mind. It's not to get confused when you're talking about auto-enrollment, when you're talking to your staff. The amount, the 1.5% of their salary is going to be their total salary. It's going to be basic, it's going to be overtime, it's going to be any BIK. And that 1.5% will come off the bottom line of the payslip, not off the top line as in a traditional pension. So a little bit more just about administration. A new body, the National Automatic Enrolment Retirement Savings Authority, shortened to NESRA. Our government loves their acronyms. That is going to collect the employer-employee contributions. It will invest the contributions in line with the decisions taken by employees. So they will get an option what way they want to invest it, either low, medium, or a default scheme. The retirement date is going to be the same as a state pension, which is currently age 66, may change in the future. If an employee dies before the age of 66, the value of their fund will be paid to their estate. So when the employee comes to 66, the benefits are going to be drawn down. So the employee will be able to take 25% of the fund as a lump sum, first 200,000 tax-free. There's a little bit of ambiguity about what will happen to the 75% remainder. The government hasn't fully answered that, but the assumption is the remainder is going to be able to take it as an annuity or using an approved retirement fund like a current pension. So there's going to be a bit of a change there. The authority has appointed 4 investment managers. They've appointed 3 investment managers at the moment. They've appointed Irish Life Investment Managers, Amundi, which is the largest European investment manager, and BlackRock, one of the large US investment managers. They're each going to provide 3 levels of risk funds, a low, medium, and a high. The employee can choose to either go for low, medium, or high, or go into a default lifestyling strategy, which will start at high and reduce to low as you come closer to retirement. The other key feature is the retirement benefits. There's going to be a pot. It's going to follow the member. So if an employee has been working for one of your competitors and then moves to you, that pot will follow them, and it's going to be based on their PPS number. There is no option for them to top up. There's no ABC facility. There's no way to change the contribution amount. The other point is there will be no self-employed people at the initial stage. The reason why it's failed in other jurisdictions. So if anyone is a class SP or SI, they are not going to be automatically enrolled. So you need to plan for AE. You need to look at what gaps you got there. You need to decide what is your best route. Do you currently have a pension scheme in place? You need to see, are existing staff members, could they join the current pension scheme? Are you able to force them into it? Are you not? Have you got to encourage them to go into it? You need to future-proof it for new staff. You need to look at contracts. Yvonne's going to talk about that. But you need to be in a position that you are ready for automatic enrolment before the 1st of January. So what is NESRA going to do for you, and what will you have to do? NESRA is focusing on tech. So they're putting a huge amount of focus on tech, and the payroll software you have is going to drive a lot of what's happening because they're going to be drawing information from revenue. Mary's going to talk a lot more about that in a while. There is going to be an online portal for employees and yourselves as employers. It's going to give you information. We haven't seen it yet. We don't know what is going to be in it, but the assumption is it's going to give you some amount of administration on it. They say they're going to offer back office support. We'll wait to see what sort of phone line that's going to be there or what sort of context you're going to give. But from your side of things, the important bit for you is to keep payroll data correct. You will have to deduct your percentage. Mary will talk about the mechanics of that in a while. And the employer contributions will continue to be deductible for corporation tax purposes, which is the only positive there for you, assuming you have made profits and are able to claim back corporation tax. So if you currently have a pension scheme, there is potentially a few challenges that are there. Is it voluntary, or does everyone have to join it? If it's voluntary and there's people who aren't members of the scheme, they will be automatically enrolled. So you need to bear that in mind. You need to look at vesting periods. They can be a positive and a negative for the employer. You want to look and see what you want to do it. Is there probationary periods where employees can't join the scheme until after 6 months? Do you need to look at your contracts? Do you need to look at amending them? Yvonne will talk a little bit about that in a few minutes. The other thing is there's standards and exemptions. If there is a deduction for pension, either employee or employer on payroll, they will be exempt from automatic enrolment. There will be standards set over time. At the moment, we're talking about 2032. So any contribution by employer or employee in the pension through payroll is going to keep you out of automatic enrolment. And you need to decide, does it make sense for you to have a hybrid scheme, whereby some people are in automatic enrolment and some people are in a pension scheme? Or do you want to integrate just one or the other? So you need to consider a few things. You need to consider the eligibility. You need to consider, are you going to put people in your own pension scheme or keep it there? Your big issue is going to be higher rate taxpayers. Staff that are on 40% tax are going to want to get 40% tax refund or contributions rather than a government top of 25%. There'll be more money going into the pot for them. You need to look at new members. Do you need to change categories in your pension scheme if you've got one in place? Or are you going to let automatic enrolment drag them up? And the other part is education. You need to discuss with your staff that this is happening, that this is coming. This is going to affect your pay slip. It's important that you have that conversation early, because the last thing you want is a member staff coming into you in the first pay slip after the 1st of January and go, what is this deduction? Because in that scenario, you're in the back foot. They are going to be asking you for a pay rise to match that deduction. So you need to educate your staff early and appropriately. So I'm going to hand over now to Yvonne, who's going to just look at the HR side of things.
Okay, thank you, Patrick, and welcome everybody. So, as Patrick said, I'm just going to focus really on obviously the HR consideration side of autumn enrollment. Okay, so the first element, and I always kind of smile to myself when I see this compliance, legal, and administration readiness. Suppose from a HR perspective, I always see ourselves as the gatekeepers of policies and procedures. And but look, it's important to safeguard employers as well around this space too, no more than the WRC obligations and employment law obligations, but really on the compliance side of things, one of the implications is potential penalties and reputational damage to employers who don't operate or introduce auto enrollment or who don't do it right as well, or who penalise employees for wanting to join auto enrollment. And there are some heavy enough fines out there. Well, that's what NIRSA have been telling us anyway. It could be anything from 5,000 to 50,000 um, per offence, and potential um, prison term as well, obviously depending on the seriousness of the offences. But look at that's the, I suppose that's the gatekeeper in me, or the safeguarding HR person in me, to kind of go in on worst case scenario. But let's, as I said, we're here to safeguard. So let's focus on what the key areas are around the compliance piece, legal and administration readiness. Update your employment contracts. Patrick has said that throughout his section there. And really, that is around that whole waiting period on the probation. We all have 6 month probationary periods, and then the more common is that people join the pension scheme after they pass a probationary period. But auto enrollment is coming in from day one, guys. So if you do have an occupational pension scheme in place, you need to talk to your pension provider about either bringing that back to day one, or are you going to run two pension schemes, auto enrollment and your occupational pension scheme. So you really need to think about that piece. Have a look as well too if you do have different pension schemes in situ, and what are the gaps, who are in pension schemes, who aren't as well. Also have a look across your business to see, your age profile, the demographics as well too, around that whole space. Patrick again and Mary, more specifically, will talk about payroll systems and everything else. But look, upgrade your HR and your payroll systems. A lot of people we work with have HR and payroll systems, but some people we work with are still manually based with spreadsheets, etc. So, you really do kind of need to keep on it. Even though NERSA will administer the whole auto enrollment piece, it's about you having your finger on the pulse in relation to your staffing changes, um, people going on maternity leave, parents leave, etc., and are they pausing their auto enrollment, all that kind of thing. So you really, really need to keep on top of that space and look at obviously registered with Nurse Employer Portal as soon as possible. Employee engagement and communication. Again, Patrick has touched on this too, but you really, really do not want to have people knocking on your door asking, what is this deduction from my salary, from my pay on a weekly or monthly basis? Get ahead of the game here. Employees need to be informed. Employees will have questions about contributions, fund management, and the opting out piece. So every time I think of the opting out piece, I think of a jig, hop in and hop out. But it really is, the rules are really, really clear about this. Patrick touched on them as well too. But poor communication will lead to dissatisfaction, misinformation, or mistrust, and you don't want to find yourself in the WRC in relation to payment of wages, claims, or anything like that. So, areas to focus on would be having a very clear communication strategy. Start now, communicate what's relevant to whomever, however your organization communicates. Be very clear that this is coming in, guys, and it is a mandatory piece. Educate your staff on auto enrollment and occupational schemes. If you need to have workshops, FAQ sessions, all that kind of thing, then we can help you with that as well. But you do really need to avoid mandatory changes for current staff too. So whatever about new staff coming in, that's a quick fix with effect from the 1st of January. You'll be automatically enrolled in the auto-enrolment or your occupation's pension scheme. But in relation to your current staff, how is that going to impact them? And that's going to be the main question that they're going to have, and address the opt-out and fund concerns as well. You will have questions and queries from people who are going on, carers leave, maternity leave. How is that going to impact me? Another area then, I suppose, that we would look at and consider is that whole talent attraction and retention piece. We're in full employment here in Ireland, but that competitive pension offering piece is vital for your employer branding. So the pension auto-enrolment, you need to use that as a key employee benefit. Everybody is going to have to do it anyway. But remember what Patrick said about, what the state pension is going to be, what the average industrial wage at the moment is 50,000. And we're in a situation now whereby in however many years, the home owner versus the rental piece, I don't think that's going to change anytime soon, guys. So it is about educating your staff and using where possible that whole employee benefit piece at the auto enrollment as an employee benefit piece. Consider enhanced contributions. So what I mean by this is if you currently got a pension scheme in place, an occupational pension scheme in place, have a look and see, remember what I said about looking at your staff demographics. Who are your key players? What's your age profile, etc., etc. So you could introduce an occupational pension scheme, introduce the contribution rates on the employer side, obviously all within the affordability and budgetary piece as well. And look, as we always do when we do a lot of comp and bends, consultancy work with clients, we always take into account the pension piece into that overall total rewards package too. Again, remember what I said at the beginning, guys, about the gatekeeper and monitoring, evaluating, that whole ongoing compliance piece requires robust monitoring systems to ensure timely enrollment and contributions. And Mary will speak about that piece as well too. But even though NERSA will be administering the system or the auto enrollment piece itself, there will be a lot of work that needs to be done back at base too. So conduct your regular audits, collaborate with your pension providers as well, and just ensure when you're doing your checks and balances around that whole payroll, HR element piece, that auto enrollment now forms part of your ongoing processes as well. Again, just think, I suppose, the long game as well, your strategic HR opportunities. Non-compliance with the auto-enrollment requirements can lead to penalties and reputational damage. Well, remember what I said and what Patrick said as well. It's about that financial well-being piece. It's about that education and the communication piece as well. This is about thinking ahead. This is about people planning when you're 23, 24, 25 years of age. You're probably not thinking when you're 60, 66, really, but it is about that and getting people ready to be in that space when they do retire. The auto enrollment piece, very key now to education around your onboarding and induction piece. Embed that in these processes. Your data protection and GDPR piece, like any other personal data as well. Ensure that secure handling of pension data and your workforce planning. Align that pension strategy piece with your workforce dynamics and your strategic plans, succession planning in that, recruitment, retention, all of that really auto enrollment now needs to be embedded in that whole piece. And then here's just some key documentation to be reviewed. I've mentioned the contracts of employment. I've mentioned the recruitment attraction strategies, the EVP as well. Your return to work, particularly for people who have been on long-term sick leave or maternity leave. Look at your leave policies. What do I do when I'm on a period of unpaid leave, such as statutory leaves? I touched on the probation and I suppose the waiting period there, do you have then retirement policies in place? Your absent management policy around that whole sick leave piece too, people unfortunately can be out on sick leave for a long time. So what do we do then? Performance management. Remember what I said about looking at if you don't have occupational pensions, maybe that's a driver or an attraction tool as well too as part of that whole piece. And then your exit interviews as well. But what employers must ensure is that employees are adequately informed of all changes to any policies or contracts that are amended and changed as a result of auto-enrolment. Okay, so that's the HR considerations, guys. And any questions you have, please pop them in. I'll hand you over now to Mary Byrne, and she'll talk to you about the payroll considerations. Thank you.
Thanks, Yvonne. Morning, everybody. So over the next few slides, I'm going to go through some payroll considerations just from a payroll processing point of view. There are going to be guidelines only for now because we have not seen the payroll system fully tested yet. We've only been given little snippets here and there. So I'll go through as much as I can and give you as much information as I have in front of me. So as Patrick and Yvonne have said, the auto-enrolment is going to be driven by your payroll. So it is very important that your payroll data is up to date, accurate, that your correct systems in place. When it comes to accuracy, we are aware that some companies may have manual process in place for returning the payroll submissions to revenue. That's a big risk now because you are at risk of employees being enrolled when they shouldn't be, or the wrong contribution being deducted, etc. So we would encourage anyone that has a manual system for doing the payroll that they look at doing a payroll package just to help streamline the process and just help reduce the amount of admin that this is going to be on you, because already there is quite a lot from a payroll point of view. You have your PO modernization, that's your the revenue submissions, the expense submissions. We'll have this now on top of it. So any way that you can make sure that you're returning the most accurate information, you should look into it, because nurses are going to be keeping on top of this. They are going to look at who is doing it properly. And if they're not doing it, why aren't you doing it? So it's going to be looked at in more detail than some of the revenue submissions that we've seen so far. From your employee details on payroll, it's very important that you have all the data correct. As Patrick mentioned, there is a minimum age and maximum age there for enrolment. So the date of births must be accurate and up to date on the system. If we don't have a date of birth, there's probably still a risk that someone could be auto-enrolled because the system won't know what age the person is. It's Class A PRSI that is going to be affected by this mainly. So just make sure you have the correct PRSI class. Anyone in Class S won't be affected by it. If you have pension and contributions on your payroll, or anyone that's on pension, make sure that you have that set up in your payroll properly, because obviously that will void any of the auto-enrolment for anyone. The payroll software, we use Quantum at the moment, so we do know that that is going to be up to date for auto-enrolment. So just make sure and contact your payroll provider to make sure that they will be ready for auto-enrolment functionality. The next slide, this slide here, this is from Quantum Payroll Package. This is a guideline of what we think is going to happen so far. So anyone that has Quantum, you'll be familiar with the process. So you have your standard payroll run, your start period, you update your employees, then you do the get your RPN, your ERN. So now the third button will be get your AEPN, and this will determine who you will be processing for the auto-enrolment. So I imagine you get a report very similar to the RPN that you get when you download the tax details for employees. If you're doing your timesheets, your expenses, then the standard reports, close period. And then you're going to have 3 submissions: your normal revenue submission, your expense submission, and now a third one for the auto-enrolment. So the expected process, so I'll just go through from a nurse point of view at first. So we've been told they are going to determine, the eligibility, and they're going to be looking at the revenue submissions that have been sent in, previously. They're going to be checking them weekly. They're going to be responsible for issuing the AEPNs. They're going to enroll the employees and notify the employee and employer. They will be fully in control of managing the opt-in, opt-out, suspension, re-enrollment. So if an employee comes to you to say, actually, I want to opt out or I want to suspend, you can't do that. You will have to direct him to NERSA to do that for them. We will not be able to manage any of this for the employee. We won't be able, So nurse will control everything, changing circumstances, and making sure that the latest AEPN is available for payroll. So from an employer-employee point of view, so when the employer's doing the payroll, as I said, you download the AEPN, very, very similar to the RBK, and that will, you'll see then who's included for the auto-enrolment. Once you get that notification, we've been told then it is up to the employer to issue a letter to the relevant employees about enrolment or re-enrolment, etc. So from my point of view, for anyone that we look after payroll for, what we will do is we will download the APN. Once we get that report, we will send it to you to show you who has been auto-enrolled. You will then have to communicate to each of the employees, this is what our payroll has received from NERSA. You are now auto-enrolled or re-enrolled, just to make them aware. So communication is key. As I said, all queries must go through NERSA. The employer and your payroll person will not be able to assist with any queries. We can only give them the information that we have. You've been auto-enrolled. This is the percentage we have to apply. Contribution deductions will be recorded on the payslip, very similar to the pension, where it's recorded on the system, so it'll be under the deduction side of the payslip. The submission is very, very strict. The cutoff time is 6:30 on pay date. So once 6:30 comes on pay date, that's when the submission has to be done. The employers then transfer the contributions to NERSA via the submission, and then NERSA will promptly look for that payment via direct debit, like the revenue payments, just after 6:30. Payroll payments are going to follow the payroll frequency. So, for example, if you have a weekly and a monthly payroll, you could have up to, if it's a 5-week month for a weekly payroll, you could have up to 6 direct debits in a month to cover the payments for auto-enrolment. So that's something just to factor in for your planning of your week, to make sure the funds are available each week for the AEPN, not like the revenue where it's a monthly direct debit. So from a payroll review point of view, check all your payroll elements. All gross pay components will be included. Paid leave, now this, as far as this is subject to change, but at the moment we've told paid leave will be liable. So if you have someone that you're topping up, say there's maternity pay and there's maternity benefit or maternity pay on it, that will be subject to it. Your sick pay, that will be liable for it. Anything that's unpaid, obviously, because it's a minus figure, that will not be liable. But as I said, this could change, but at the time that we were told, that's what the paid leave will be liable for auto-enrolment as well. Check your payroll deductions, because obviously anyone that's already set up on the payroll, it has to be recorded on the payroll, will void a entitlement. So if an employee has their own private pension scheme that it's been deducted, from or taken from their bank accounts outside the payroll, they will be auto-enrolled onto the payroll. So any contribution recorded on payroll will void entitlement. If it's not on payroll, you're going to be auto-enrolled. Anyone that with Ross certs, make sure they're valid. As far as we know, this is how the employer is going to get access to NERSA. So for anyone that gets their payroll looked after by us, we as an agent, we have Ross access, and we've been told that that's how we get access to the portal for NERSA. Ensure your payroll is correct. Because I know, there can be changes once a payroll is submitted and we'd have to resubmit a payroll for E. That's not going to be able to happen going forward. So once we hit submit on payday, that is that submission closed off for NERSA. Anything after that point in time will be rejected by NERSA. So they are only going to accept the submission at the 6:30 deadline. If for some reason you didn't get to run your payroll, say it was maybe something like a power outage or internet down, so you're going to have a late submission for your first submission, not an amendment, but your first submission for your pay date, they will accept that submission on the day that you get to process it. So up to 6:30 on the day you get to process the payroll. So say, for example, on a Monday, it's your pay date, you didn't get to do it for whatever reason, you do it on the Tuesday, you have up to 6:30 on the Tuesday then to submit that. NERSA will examine late submissions to depend on the issue to see what why it happened, and fine, penalties, interest may be applied. If someone was due a bonus if it wasn't included on the original submission, they must be left until the next pay run once the submission has been made. If you really needed something corrected, you can only go through NERSA to do it. We will not be able to make any corrections for late adjustments to a current submission. So payroll. So just a couple of points then, just to reflect back on. As I said, gross pay as defined by revenue is liable for auto-enrolment. So that's your salary, your back pay, anything, bonus, sick pay, etc. It's not just your basic salary. All pay, gross pay as defined by revenue is subject for auto-enrolment. It won't apply to Class S individuals, so make sure you have the correct class in place. Anyone that does a shadow payroll, once the employee is Class A and there's no pension, auto-enrolment will apply. So your submission date for auto-enrolment is going to be the same as your revenue submission, because your revenue submission, you should be doing it on or before pay date. So your submission for auto-enrolment should be the same. As I said, NERSA is going to be responsible for determining eligibility enrolment. The employers will not get a say to override any instructions from NERSA. Very important, make sure your software is up to date. This will help you manage the processing of auto-enrolment. As I said, auto-enrolment is going to be driven by your payroll. That's it from me, and I'll just hand you back to Patrick.
Okay, thank you, Yvonne. Thank you, Mary. That was very interesting there.